Hey, what's going on, guys? It's Ricky with TechBot Solutions, and in the next couple of minutes, I'm going to be talking about the 3 biggest mistakes that you want to avoid in 2019 when it comes down to investing in the stock market. For those that are not familiar with who it is that I am, my name is Ricky. I run the largest YouTube channel and the largest private Facebook group for those who invest in the stock market. The link is going to be down in the description if you want to join over 180,000 members within our free Facebook group. So let's go ahead and get started. And not only am I going to talk about the 3 mistakes to avoid, but I'm also going to give you kind of like a solution. Again, this is my opinion and my approach. It doesn't mean that you have to take it to heart, but I really hope that it could act as a positive catalyst for your success. So the first thing that I'm going to be talking about is one of the biggest mistakes that I see newer traders make is they trade based off of not just other people's opinion. Again, that's a very huge mistake that a lot of traders make that ultimately you should be very well aware of, that you should completely avoid, but it has to do with confidence. They don't understand what it is that they are trading. They don't understand what they are investing in. All right, so to give you guys an example of confidence, the reason that I think that that's such a common mistake that a lot of traders make is the market is so accessible. You can literally open up an account today, fund the account, and then start trading stocks tomorrow or when your cash settles. Although that's something that, we could be empowered by, it's also something that you have to be, very defensive of. And the reason that I say that is, again, if I were to tell you that I'll sell you my 2015 GTR for $1,000, it doesn't take a brainiac to understand that that GTR is well worth over the $1,000 investment, right? So it would make sense on why you would, hunt for the entire day to come up with those $1,000 to make sure that you close that deal. That's the confidence that you should have when it comes down to investing in the stock market or trading in the stock market, whatever your approach is, right? You want to make sure that every time that you take advantage of an opportunity, that there's no question in your mind that you have a reason on why that's a good deal and why it's going to make you money. Again, it doesn't necessarily mean that it's always going to work in your favor, but as long as there's always a reason that you take that position, as long as you always have an understanding of what you're getting yourself into, you at least have a leg up based on, a majority of the market. So again, the statistic that 90% of people who invest in the stock market lose money. What is it that you are going to do to become part of that 10% that actually profits? Very simple habits that you can begin to implement that will allow you to become much more consistently profitable within the market and set you apart from that 90%. Moving on to the second part. So many newer traders bag hold. How many of you guys, and again, I've been someone when I was first getting started, even from time to time, I sometimes struggle to cut my losses. Again, there's a lot of emotions when it comes down to losing money. And one of the best, best practices that I can encourage any newer trader to do is to find this middle ground where you're not investing too much money that it makes you uncomfortable, but that you're investing enough to have some skin in the game. Obviously, the number one approach that I would encourage anybody is to start paper trading. But if you think that paper trading or simulation trading just is not for you and it's not real enough, then the really beautiful thing about that is that you need to ask yourself and set time aside, and no one else can decide this. But it's, again, let's say that if you were to start with $500, and then you say that, okay, well, I'm gonna have my max loss at 1 to 2%. Do the math. What's 1 to 2% of that $500 initial investment? And is that something that you are comfortable to see? Another best practice that I would really encourage you to do is that every single time, and again, this is something that not a lot of people make. Again, that's why 90% of people who invest in the stock market lose money. Especially when you're just getting started, it's so important to have structure and to plan out every single trade. So psychologically, you should understand what it's going to look like if the stock plays out according to your plan, right? And also if it doesn't play according to your plan. Let's say that stock offers a 5% margin of profit based on your technical analysis. Let's say it offers a 2% stop loss or 2% potential for loss. You should be able to do the math and write it down so you see it, and psychologically it makes sense to you that, hey, seeing how much I could be down and seeing how much money I can make, that's removing all the emotions away from it, because again, it's already something that you've planned and prepared for. So when you see it on your screen, it doesn't surprise you. One of the biggest mistakes is when someone thinks that they're only going to make money and then they end up being in the red, and they see that figure of how much it is that they're down, how much money they've lost, and then they're just like, okay, well, I just want it to go back. And there is no plan. That's when you begin to bag hold, and then you end up losing an exceptional amount of money because there is no risk management. One of the best practices that I can encourage any trader to do is to become a true professional in cutting losses. And one of the last things that I want to talk about is, again, a lot of newer traders try to focus on pump and dumps, try to focus on momentum stocks. And overall, one of the most important parts, I think, when it comes down to trading, especially as a beginner, is understanding direction. You're someone that is most likely going to make a lot of mistakes with your entry points and your exit points. And it's not going to benefit you to invest in patterns that are already showing signs of a descending pattern. Let me give you an example, 2 examples. I would fully say, again, this is my opinion, pump and dumps, momentum stocks, which means that they move very quickly, or penny stocks are something that newer traders should probably avoid. The reason that I say that is your entry points are probably not going to be the best when you're just getting started, meaning that when you buy a stock, it's something that you're going to have to work on and refine and get better with. As time goes on, yes, your entry points, as you become more familiar with patterns and everything that goes into, technical analysis or just trading in general, you'll begin to refine that. But again, if you're investing in a descending pattern and your entry point is not the best, meaning that it continues to make lower lows and lower highs, it's selling off, right? But you think that you can ride it as it shortly recovers. So one thing that you can do is your entry point, right? Let's say that you get in at a decent price, it goes up maybe 0.5%, 1%, but then all of a sudden it begins to sell off. You didn't have an exit strategy, your entry point wasn't the best, and now you're riding that stock down. The reason that I think it's so important to focus on direction is because you have kind of the luxury of investing in something that's actively trending up. And what I mean by that is one of the biggest directions that we try to focus on when it comes down to investing in the stock market, especially trading for beginners, is to only invest in patterns that are showing signs of growth, meaning that they're making higher highs. So your entry points don't have to be so perfect, but due to previous patterns, you're bound to most likely still come out on top because the overall direction is still in your favor. Again, you have to understand that a lot of things are not going to be in your favor when you're just getting started. And that's okay. You just have to understand that, and that's okay. But it is going to be your job for 2019 to make sure that you implement structure, that you continue to refine your trading strategy, and that you cherry pick the different best practices that you find attractive from the different people that you network with and develop your own unique style of trading. No one should tell you where to buy and where to sell. You should never trade based on other people's opinion, and you should always have the confidence in knowing what you are about to invest your hard-earned money in. That simple. So again, guys, thank you guys again so much for your time. If you would like to stay connected and join our free Facebook group, that's going to be the first link in the description. We'd love to act as a positive catalyst for your success. Also, if you do want to watch me trade live every single day, there's going to be a second link in the description. That's our Learn Plan Profit group. I work with them every day. You can direct message me within our private group chat that we have within that as well. And altogether, continue working hard, continue following your dreams, let your passion be what drives your success. I wish you guys an amazing and green 2019. Be sure to like and subscribe, and like always, let's make sure that we end the year on a green note. Take it easy, team.